Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So already 11 problems we have completed on lease accounting. Last videos I have completed 9 problems on writing the journal entry in the books of the lessee and in the books of the lessor. Then 10th and 11th 2 problems I have completed on evaluation of lease proposal. That means a business is confronted with a problem whether to take the asset on lease or whether to buy it. So any one of the decision the company has to take, whether to lease or whether to buy it. So these type of problems are called evaluation of lease proposal. And how to evaluate the lease proposal? We calculate the cash flows in buying decision and in leasing decision. So whichever option we have lower cash flows, lower cash outflow, then that option will be better. So already I think you have watched the earlier videos, got the comment on how to evaluate. Now I am continuing the 12th problem. So before starting the problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. 12th problem. Messrs. Manank Limited plans to acquire an asset of rupees 10 lakhs and is the following options. The cost of the machine is 10 lakh. The company wants a machine that values 10 lakh. Two options are given. First, purchase the asset by taking a loan of rupees 10 lakhs repayable in 5 equal installments and interest on outstanding balance at 15% per annum. The first option, the company wants to buy the machine by taking a loan from bank, rupees 10 lakh, and we have to repay it in 5 equal installments. So 10 lakh divided by 5, 2 lakh. So every year 2 lakh rupees the company has to repay. In 5 years the loan will be repaid. First year end 2 lakh, second year end 2 lakh, third year 2 lakh. Like that we have to repay 10 lakh rupees to the bank in 5 equal installments, along with interest at the rate of 15% per annum on the outstanding balance. For example, at the beginning of the year, first year, 10 lakh rupees loan. On 10 lakh rupees loan, 15% interest will be paid at the end of first year. At the end of first year. So 10 lakh minus 2 lakh, 8 lakh will be the outstanding balance of loan at the beginning of second year. Now on that 8 lakh rupees, again 15% interest will be calculated. That is the interest for the second year. Now after 2 years, 10 lakh, 8 lakh minus 2 lakh, 6 lakh rupees will be the outstanding balance at the beginning of the third year. Like that, on the balance outstanding, 15% is the rate of interest to be paid. Now, lease, second option. First option, buy the asset by taking a loan from bank. Second option, lease the asset. Lease the asset at an annual rental of 320 rupees per 1000 for 5 years. For every 1000 of asset value, 320 rupees is the lease rent, but our actual cost is not 1000. Our actual cost is 10 lakh. So we have to find out for 10 lakh rupees cost of asset, how much would be the lease rent. Then the firm calculates depreciation at 15% per annum. That means depreciation will be available only if we buy the asset. If we take the asset on lease, depreciation will not be allowed by Income Tax Act. Then depreciation 15% per annum. The asset has a life of 10 years. The marginal tax rate 50% and its cost of fund is 16%. The cost of funds means cost of capital. The present value factors we will take 16%. Tax rate 50%. Life of the asset is 10 years. This is the complete problem. Now we have to evaluate and tell the company whether buying option is better or leasing option is better. There is no cash inflows given, only cash outflows are given. So we have to find out what is the PV of cash outflow in case of buying option and what is the PV of cash outflow in case of leasing option. So first I am going to evaluate the cash outflow on buying option. Purchase option. Calculation of depreciation. The life of the asset is 10 years. So we have to calculate the depreciation for 10 years under WDV method. It is given in the problem. The asset has a life of 10 years. The firm calculates depreciation at 15% per annum. So on WDV method, it is not specified straight line method. We have to calculate on WDV method, written down value method. Calculation of depreciation, year 1, 2, 3, 4 up to 10 years. What is the cost of the asset? 10 lakh. 10 lakh rupees is the cost. Depreciation 15%. So 15% of 10 lakh, 1,50,000 is the depreciation for the first year. Now what is the WDV closing? So 10 lakh minus 1,50,000, 8,50,000 is the WDV at the end of the year. The WDV at the end of first year will become WDV at the beginning of the second year. So second year beginning the WDV is 8,50,000. This 8,50,000 is written here. Now 15% of 8,50,000. 15% of 8,50,000, 1,27,500 is the depreciation for second year. Now deduct 8,50,000 minus 127,500. You get 7,22,500 is the WDV at the end of second year. The second year end WDV will become third year beginning WDV. So 7,22,500 I have taken third year beginning. Now again 15% on this amount, you will get 1,08,375 is the depreciation for the third year. Now deduct 722,500 minus 108,375, you get closing WDV 6,14,320. Like this, we have to calculate depreciation for 10 years, and we got all 10 years depreciation. First calculation completed. Calculated depreciation for 10 years. Now I am going to calculate the interest paid to bank. When we have taken a loan from bank, we have taken a loan of 10 lakh rupees and it is repayable to 2 lakh rupees at the end of each year. So year 1, 2, 3, 4, 5. First year beginning, we have 10 lakh. First year beginning of the year, 10 lakh rupees is the loan, 15% interest. So 15% of 10 lakh, 1,50,000 is the interest charges paid in the first year, at the end of first year. Now at the beginning of second year, the loan amount outstanding is 8 lakh because 2 lakh rupees are paid. At the end of each year, 2 lakh rupees will be paid because in 5 installments, the loan should be paid off. So 10 lakh divided by 5, 2 lakh. So 2 lakh rupees will be paid, loan repaid at the end of first year. Then 2 lakh rupees second year, 2 lakh rupees third year, 2 lakh rupees fourth year, 2 lakh rupees fifth year. So 2 lakh rupees are reduced. So first year 10 lakh. Second year we are having a balance of 8 lakh because 2 lakh rupees repaid. So 15% of 8 lakh, 1,20,000. Again 2 lakh repaid, 6 lakh. 6 lakh 15%, 90,000. Again 2 lakh rupees loan repaid, 4 lakh. 4 lakh into 15%, 60,000. Now 4 lakh minus 2 lakh. Last year only 2 lakh rupees are left. 2 lakh into 15%, 30,000. Interest charges for 5 years. The first calculation, depreciation, we have calculated for 10 years. Second calculation, interest, we have calculated for 5 years. Now we calculate what is the PV of cash outflow during 10-year period. During the 10-year period, how much is the present value of cash outflows? See here. Year 1, 2, 3, 4, 5, 6 up to 10. First 5 years. First year, at the end of the first year, we are repaying 2 lakh rupees to the bank. Second year end 2 lakh, third year end 2 lakh, fourth year end 2 lakh, fifth year end 2 lakh. The first 5 years we are paying every year 2 lakh rupees loan repayment. These are the payment. Next, interest charges. First 5 years we are paying interest charges. First year 1,50,000, 1,20,000, 90, 60, 30. These are the interest charges paid for first 5 years. Now depreciation 15%. Already we have calculated here first table. Depreciation for 10 years. So these depreciation I have copied down for 10 years. Now tax shield 50% of interest and depreciation. See here, according to Income Tax Act, according to the provisions of Income Tax Act, depreciation and interest are allowed as deduction in computing the taxable income. So by paying interest, by charging depreciation, our tax liability is going to decrease. We are getting a tax shield on account of interest and depreciation. What is the marginal rate of tax? 50% given in the problem. So we calculate 50% of interest payment and depreciation. See here, interest 1,50,000 and depreciation 1,50,000. Take the total 1,50,000 plus 1,50,000, 3 lakh. 50% of 3 lakh is 1,50,000. So tax shield 1,50,000. Second year, what is the interest? 1,20,000. How much depreciation? 127,500. Add up 1,20,000 plus 1,27,500. Add up both and calculate 50%. Calculate 50%. 1,20,000 plus 1,27,500 into 50%. You will get 1,23,750. Similarly, 90,000 plus 108,375 into 50. You will get 99,188. 60,000 plus 92,119 into 50%. 30,000 plus 78,031 78,031. Add up both into 50%. 50. Now here we don't have any amount. No interest paid after 5 years. Only depreciation. So 50% of 66,556. 50% of 56,572. You calculate 50% of all these amounts. You got. What is this called? Tax shield. 50% of interest and depreciation. We are getting the advantage of tax by having depreciation and interest. Now net cash outflow. Net cash outflow means from the payment of principal repayment and interest payment, deduct the tax shield. Here I have given the formula in note. Note, net cash outflow is equal to principal repayment plus interest payment minus tax shield on interest and depreciation. The first, principal repayment 2 lakh. How much is the interest payment? 1,50,000. Add up these two. 2 lakh plus 1,50,000, 3,50,000 minus tax shield. How much is the tax shield? 1,50,000. So 2 lakh plus 1,50,000 minus 1,50,000, you will get 2 lakh rupees. What is this 2 lakh? Net cash outflow. Similar calculations for second year. 2 lakh plus 1,20,000 minus 123,750, you will get 1,96,250. 2 lakh plus 90,000 minus 1,90,812. Sorry, minus 99,188. You will get 1,90,812. Then fourth year, 2 lakh plus 60,000 minus 76,060. You will get 1,83,940. Similarly, 2 lakh plus 30,000 minus 54,151. 175,849. Here we don't have any payment. From 6th year onwards, we don't have any principal repayment, we don't have any interest payment. Both are not there. So only tax shield. So we are deducting tax shield now. We are deducting the tax shield from these payments. But here payments are not there. So minus 33,278, you subtract it. Minus. 0 plus 0 minus 28,286. You will get 286. Minus 286. 0 plus 0 minus 24,044. You will get minus 24,040. So bracket denotes minus, subtract. Now multiply. PV factor at 16%. In the problem it is given the cost of capital. The discount rate is 16%. So refer the PV table, present value table at 16%. Otherwise you can directly calculate on the calculator also. 16% means 1 divided by 1.16. 1 divided by 1.16. 1 divided by 1.16. You will get 0.8621. 0.8621. I have written 0.8621. Simply is equal to 0.7432. 0.7432. Just press is equal to, you will get second year, third year, fourth year. Again I repeat, if you don't have the PV table, with the help of simple calculator, you can find out the PV values. The percentage is 16%. So 1 divided by 1.16. 1 divided by 1.16. You will get first year is equal to, press is equal to, you will get first year. If you want second year, press is equal to second year. Press is equal to third year. Press is equal to fourth year. Like that easily you can get all the PV factors. Now multiply. 2 lakh into 16%, this PV factor, you will get this one. multiply net cash outflow with PV factor, PV of cash outflow. Bracket denotes minus. Bracket means minus. So you add up all the first 5 values, minus 13,657, minus 10,008, minus 7,333, like this. Finally, 5,85,527. The total is 5,85,527. This is the present value of cash outflow in case of purchasing option, buying option. If the company has taken a loan from a bank for rupees 10 lakh and repaid in 5 equal installments of 2 lakh rupees along with interest at 15%. In that case, the present value of all cash outflows will be 5,85,527. Now we compare this PV of cash outflow with the PV of cash outflow in leasing option. Now here, lease option. For every 1,000 asset value, the lease rent is 320. It is given in the problem. For every 1,000 asset value, 320 rupees lease rent. But our asset value is 10 lakh. For 10 lakh rupees asset value, how much? So 10 lakh divided by 1,000 into 320, 3,20,000. So annual lease rental is 3,20,000. So annual lease rental 3,20,000. Less tax saving. According to Income Tax Act, the lease rent paid will be allowed as deduction in computing the taxable income. So whatever lease rent paid, that can be debited to profit and loss account. Your profit is going to come down. When your profit is going to come down, you are gaining the reduction in tax liability. So tax saving. How much tax saving? 50%. So 3,20,000 minus 1,60,000. 1,60,000 is the net cash outflow every year. Every year, first year and second year and third year. And what is the lease period? 5 years. 5 years is the lease period. So at the end of first year, 1,60,000. Second year, 160. Third year, 160 after tax. Now, this annual cash flows is constant for a period of 5 years. Therefore, PV of cash outflow is equal to constant cash outflow into PV of annuity factor 16% 5 years. PV of annuity factor, because this 1,60,000 is constant every year, first year, second year, third year. That's why we are using annuity factor. So refer the table PV of annuity factor. Otherwise, you add up these 5. These PV factors of rupee 1, 16%. First year, second year, third year, fourth year, fifth year. Up to 5 years. PV of rupee 1 are there. The present value of rupee 1 is already there. You add up 1, 2, 3, 4, 5. You will get 3.2743. You will get 3.2743. Multiply 1,60,000 into 3.2743. 5,23,888. This is the PV of cash outflow in leasing option. So PV of cash outflow in buying option is 5,85,527 and PV of cash outflow in leasing option is 5,23,888. Now you compare in which option the PV of cash outflow is less. Where the PV of cash outflow is less. So it is in leasing option. In leasing option it is less. So ultimate conclusion, from the above analysis, it is seen that PV of cash outflow is less in case of lease financing. Hence, lease financing should be selected. Ultimate answer is, we suggest the company to go for leasing. Don't take the loan from bank and purchase the asset. In that case, the cash outflow will be more. Our objective is, we should have less cash outflow. So lower cash outflow we are having in leasing option. That's all. So this is the end of problem number 12. So 12 problems so far we have completed on lease accounting. Come on, now we'll start the next problem. Problem number 13. See the 13th problem. Messrs. Preksha Limited wishes to acquire an equipment worth rupees 10 lakh. So this company Preksha Limited wants a machine. The value of the machine is 10 lakh. It approaches Messrs. Mamta Leasing Limited for writing the lease. That means Mamta Limited is a lessor. It's a leasing company. It will lease the assets to its customers. Now, assuming that the asset has a salvage value of 1 lakh rupees at the end of 5-year life, and given that Messrs Mamta Limited has a cost of capital 10% and tax rate 50%, calculate the minimum rental that Messrs Mamta Limited needs to charge. The asset is depreciated at 33 1/3% per annum on the written down value basis, WDV basis. In this problem, we are not evaluating the leasing proposal from lessee point of view. Previous last 3 problems we have done where the lessee has evaluated the lease proposal whether to buy it or take it on lease. But in this problem, we are required to calculate what is the minimum lease rental to be charged by the lessor. So we are evaluating from lessor point of view. The lessor is Mamta Limited. Mamta Limited wants to find out what is the minimum lease rental that it should charge with the customer Preksha Limited for leasing the asset. The cost of the asset is 10 lakh rupees. The life of the asset is 5 years. Then the scrap value, the residual value of the asset is 1 lakh rupees after 5 years. And the depreciation is at the rate of 33 1/3% on written down value basis. Now see, according to Income Tax Act, the depreciation benefit will be given to the lessor. The lessee will not have the ownership, so no depreciation in the hands of the lessee. From the lessor point of view, depreciation they can get. So when they get the depreciation benefit, the tax liability of the lessor will get reduced. The tax liability of the lessor will get reduced. It will get the benefit of depreciation, right? So we calculate how much is the depreciation per annum and what is the present value of tax shield on depreciation from the lessor point of view, from Mamta Limited. So we need to calculate the minimum lease rent to be charged by the lessor, Messrs Mamta Leasing Limited. What is the minimum lease rent to be charged by the lessor? Lessor is Mamta Limited. That's what we have to find out. From income tax point of view, depreciation is available to the lessor. In accounting point of view, the depreciation will be taken by the lessee. But from income tax point of view, the depreciation is allowed to the lessor. In order to find out the annual lease rent, the cash flows from the asset must be calculated. We have to find out how much are the cash flows. That means I am the lessor, I have to pay for the cost of the machine. The cost of the asset is 10 lakh rupees. That is the PV of cash outflow. PV, present value of cash outflow, is 10 lakh rupees. Now I have to find out what is the cash inflow I am going to get. The first cash inflow is benefit from depreciation, tax shield from depreciation. So first of all, I'll calculate depreciation. Year 1, 2, 3, 4, 5. And 5th year salvage value, I have take a provision of salvage value. 5th year end, the lessor is going to get the salvage value of 1 lakh rupees. Now WDV opening. What is the cost of the asset? 10 lakh. What is the rate of depreciation? 33 1/3% or simply 1/3. 33 1/3% you calculate or only 1/3 you calculate. So 10 lakh into 1/3. 10 lakh into 1/3. You will get 3,33,333. This is the depreciation for the first year. Now what is the closing WDV? So opening WDV minus depreciation. 10 lakh minus 3,33,333. You will get the closing WDV 6,66,667. First we complete these 3 columns. Then we'll go to the next column. So this is the closing WDV. The closing WDV of first year will become opening WDV for the second year. Now 6,66,000 will become second year beginning. Now again calculate 1/3. 6,66,667 into 1/3. You will get 2,22,222. This is the depreciation for the second year. Now subtract 6,66,667 minus 2,22,222. Subtract. Closing WDV we got 4,44,445. This is the closing WDV for second year. This will become opening WDV for the third year. Then again 1/3 depreciation. 4,44,445 into 1/3. You will get 1,48,148. This is the depreciation for third year. Now subtract 444, 445 minus 148, 148. After deducting 2,96,297. This is the WDV at the end of third year. Now this will become WDV at the beginning of the fourth year. Again 1/3. Deduct closing WDV of fourth year. This will become opening WDV of fifth year. Again 1/3. This is the closing. So these four columns we have completed. Year column, WDV, depreciation, WDV. Now tax shield on depreciation at the rate of 50%. The tax rate is 50%. So we are going to save. We are having the tax shield saving on account of depreciation. So how much tax saving? 50% of depreciation. How much is the depreciation? 3,33,333. 50% of 3,33,333. 1,66,667. Now 50% of 2,22,222. 1,11,111. 50% of 1,48,148. 74,070. 50% of 98,766. This one. 50% of 65,844. This one. So we got tax shield on account of depreciation. Now cash flows. How much cash flows we are going to get? So this one. Tax shield. Whatever tax shield we are getting, the same is the cash flow. So take the same amount, but fifth year we are going to get the cash flow also. 1 lakh rupees we are going to get the cash flow, cash inflow on the sale of scrap, residual value. This 1 lakh. Now take the PV factors at 10% for first year, second year PV factors. If you don't have the PV table, with the help of calculator, 1 divided by 1.10. 1 divided by 1.10, you will get first year. Then put is equal to, you will get second year, third year, fourth year, fifth year. Now this is the fifth year and this last is also fifth year. So same 0.6209, 0.6209. Now multiply. Cash flow with PV factors, you will get PV of cash flow. So ultimately, PV of cash inflow is 4,15,251. That means the present value of cash inflow on account of depreciation and on account of residual value, the cash inflow we are getting 4,15,251. Excluding the lease rental. Excluding the lease rental, we are getting this much cash flow. Now, PV of cash outflow 10 lakh. The cost of the machine is 10 lakh. From that, deduct the PV of cash inflow on account of depreciation and on account of residual value. 4,15,000. The remaining 5,84,749. This is the amount to be recovered from lease rental. This amount is to be recovered from the lease rental. Now, the firm should therefore have an actual recovery, total recovery of 5,84,749 through the lease rental. This much amount the lessor must recover from lease rental. The annual lease rental after tax may be calculated as follows. How much is the annual? This is the total amount we require in 5 years. In 5 years, this is the present value of lease rental we require. We want the annual. The annual lease rental after tax is total recovery required divided by PV of annuity factor 10% 5 years. 10% 5 years. So total recovery required is 5,84,749, this one. And PV of annuity factor, refer the annuity table, or if you don't have the annuity table, you take the total of 5. 1, 2, 3, 4, 5. Up to 5 years, take the total of these PV of rupee 1 values. You will get 3.7908. Divide kar do, 1,54,254.77. This is the lease rent after tax. After tax, annual lease rent. Every year lease rent. But we don't require after tax, we want before tax. So now lease rental before tax is equal to lease rental after tax divided by tax rate. What is the tax rate? 50%, 0.5. So this 1,54,254.77 divided by 0.5, 3,08,500. 3,08,510. This is the minimum lease rental required. Minimum lease rental required. Charged by the lessor is 3,08,500. Below this lease rent, the lessor will incur loss. Above this lease rent, the lessor will gain, will get the profit. So break-even lease. Break-even lease rental means the lease rental at which PV of cash inflow, PV of cash outflow both are equal. So this is the minimum lease rental that can be charged by the lessor on the lessee. Below this amount means the lessor will incur loss. Above this amount, if the lessor charges, he will get the profit. That's it. So this is the first problem, calculating the minimum lease rental to be charged by the lessor to the lessee. Now 14th problem. See the 14th one. From the information given below, you are required to advise about the leasing asset. Leasing the asset, just like the previous problem. The lessor wants to find out what is the minimum lease rent to be charged from the lessee. Cost of the asset 4 lakh. The cost of the asset 4 lakh. Then average interest rate to the lessee 12%. PV factors will take 12%. Depreciation 20% on original cost. Previous problem, depreciation was given on WDV. That's why we have to make the table to calculate depreciation. Written down value method on depreciation. But in the present problem, straight line, original cost. Every year depreciation remains same. 20%. 20% of 4 lakh comes to 80,000. 20% of 4 lakh, 80,000 depreciation same. Is expected life of the asset 5 years. Salvage value nil, no salvage value is there. Then lease rental payable at the end of each of the 5 years, this we have to find out. Lease rental to be charged every year, we have to find out. Corporate tax rate applicable to lessor 50% tax rate. Present value of annuity of rupee 1 for 5 years at 12% is 3.605. So annuity value, PV of annuity value at for 5 years at 12% is given in the problem. That's all. Now we have to find out what is the minimum lease rental to be charged by the lessor to the lessee. First of all, annual depreciation, 20% of the cost of the asset, 20% of 4 lakh, 80,000. 80,000 is the annual depreciation. Tax rate 50%. 50%. The tax shield on annual depreciation. So every year lessor can get a depreciation of 80,000. But by taking the advantage of tax, the tax benefit from this depreciation is 50% of 80,000. So 50% of 80,000 is 40,000. So every year the lessor will get a cash inflow of 40,000 on account of tax shield on depreciation. 40,000. The PV present value of tax shield on account of depreciation. The annual tax shield into PV of annuity factor 12% 5 years. Every year the lessor is going to get the benefit of 40,000. Every year. How many years? 5 years. So what is the present value? 40,000 into 3.605. 1,44,200. This is the present value of tax shield. Present value of tax shield for 5 years. 1,44,200. Let the annual lease rental be X. Suppose we imagine the annual lease rental to be charged from the lessee is X rupees. X rupees. After tax lease rental. So after tax lease rental is 0.5x. 0.5. So before tax we are charging X rupees lease rental. After tax we are having only 0.5 because 50% is the tax rate. So 0.5x is the lease rental after tax. Now present value of total lease rental of 5 years. For 5 years, what is the present value of lease rental? Annual lease rental 0.5x. So annual lease rental after tax into PV of annuity factor 12% 5 years. Annual lease rental 0.5x just now we have supposed. And PV of annuity factor 3.605. Multiply 0.5 into 3.605. 1.8025x. The present value of 5-year lease rental is 1.8025. Now break-even point. Break-even point is a point at which cash inflow and cash outflow both are equal. The present value of cash inflow, present value of cash outflow both are equal. What is the cash outflow? 4 lakh. The cost of the asset is 4 lakh. So 4 lakh rupees is the PV of cash outflow. Now The inflow we are getting depreciation 1,44,200 is the present value of depreciation cash inflow. Plus, how much is the cash inflow we are getting through lease rent? 1.8025x. 1.8025x. This is the total lease rental we are getting, right? So total lease rental plus PV of depreciation benefit. You add up both. That is the total cash inflow. So 1,44,200 is the benefit of depreciation. 1.8025x. This is the present value of lease rental. This will be equal to 4 lakh. Cash inflow is equal to cash outflow. Now keep this 1.8025x to the left hand side. 4 lakh. This plus 1,44,200 will become minus. Taking from LHS to RHS. So 4 lakh minus 144,200, 255,800. 1.8025x is equal to 255,800. X is equal to 255,800 divided by 1.8025, 1,41,914. This is the X value. X is equal to 1,41,914. What is X? Already we have written. Let the annual lease rental be X. So X is nothing but the annual lease rental. We got annual lease rental 1,41,914. The minimum lease rental to be charged by the lessor is 1,41,914. Suppose I am the lessor, I will decide that minimum lease rental I have to charge from the lessee is 1,41,000. If I charge less than this amount, I will incur loss. If I charge more than 1,41,000, I will get the profit. So break-even lease rental is 1,41,914. Lessor should agree only if lease rental is more than 1,41,914 per annum. So I am the lessor. I will agree for the lease only if I am going to get the lease rental more than 1,41,914. Then only I will agree. Otherwise, if the lease rent is less than this, I will not agree because I will incur loss. That's it. So this is the end of problem number 14.